Hi, this is Drew with Daniels Ag Services with your morning report. Markets finished up mixed yesterday with corn and wheat trading higher while beans finished slightly lower, all currently lower to start the day so far this morning. Some news out of South America. The Argentina harvest is moving along quite well. They're only around 5% done for beans and around 10% done for corn, but yield reports are very strong. Seeing a lot of beans selling right out of the field. It's pressuring basis there for a little bit, but one of the main things we're going to cover today is we're going to take a look at the estimates for the quarterly stocks and planted acres report coming up on Monday. So without further ado, let's go ahead and grab our whiteboard and going to get up here and take a look at this and explain it to you. All right, so should be pretty self-explanatory here. Up top, we've got planted acres, and then below that, we've got what we came in at 2013, and then March 31st stocks versus what we came in at 2013. So these are the average trade estimates. So if you want the ranges and all that, they'll be over on the grain analyst below this video. It'll be in there for you so you can take a look at it there. But planted acres for corn is expected to come in just over 92.9 million acres. And that's lower, obviously, than last year. We came in at 95.365 million acres. Well, why is it lower? Well, the market did its job, enticed farmers to plant more corn acres. Therefore, we did a great job replenishing stocks last year, lowered the price, whereas beans is the exact opposite. We're planting much more than we did last year because we don't have the stocks, and it's incentivizing farmers to plant beans. So market did its job last year, had a good crop year, planted a lot of acres, therefore we're lower this year. Opposite in beans, we're expected to come in at 81.369 million acres versus 76.533 last year. Then wheat, expected to come in at 56.01 million acres versus 56.156 last year, so not much of a change at all. And then again, let's take a look at the quarterly stocks here. Corn expected to come in at 7.11 billion bushels versus 5.4 last year. Big change, did a great job replenishing corn stocks last year. We didn't with beans. We're actually expected to come in around 10 million bushels lower this year than last year. We expect to come in at 989 million bushels this year versus 998 last year. Then wheat, a little lower than last year, expected to come in at 1.034 billion bushels versus 1.235 billion bushels. And this is the March 1st quarterly stocks, and this is what we got March 1st last year. So those are the estimates. Again, if you want to see the ranges, all that, head over to thegrainanalyst.com. It'll be below this video. And that's all we've got. Headed into the weekend, we'll likely see some fun squaring positions. That's something we've talked about all week. It's something they've been doing all week. So we'll likely see some profit taking. As this typically is a volatile report, a lot of people don't want to hold on to futures positions going into it due to the volatility that it can bring. So that's all we've got for today. If you've got any questions, let us know. Otherwise, have a great weekend, and we will see you on Monday.
This material is conveyed as a solicitation for entering into a derivatives transaction. This material has been prepared by a Daniels Ag Services broker who provides research, market commentary, and trade recommendations as part of his or her solicitation for accounts and solicitation for trades. Daniels Ag Services, its principals, brokers, and employees may trade in derivatives for their own accounts or for the accounts of others. Due to various factors, such as risk tolerance, margin requirements, trading objectives, short-term versus long-term strategies, technical versus fundamental market analysis, and other factors, such trading may result in the initiation or liquidation of positions that are different from or contrary to the opinions and recommendations contained therein. Past performance is not necessarily indicative of future performance. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore, investors should understand the risk involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure accessed at www.danielsagservices.com. Daniels Ag Services is not affiliated with, nor does it endorse any trading system, newsletter, or similar service. Daniels Ag Services does not guarantee or verify any performance claims made by such systems or services.